Everyone has been talking about the inverted yield curve and how it can affect the economy. However, in this video, I'm going to try to simplify everything that's going on with the yield curve, as well as talk about what its effect might be on cryptocurrency and how Bitcoin might react to a recession. So anyways, guys, make sure to stick through this video as there is a high chance that you can make quite a bit of money if you do understand what's going on. But before I get into this video, I do just want to say that I recommend you do your own research before entering any positions, as this video is purely for educational purposes only. So make sure you guys subscribe for more financial content and news if you guys are interested in making money. Now, obviously, everyone has been hearing about this. The inverted yield curve has been a very, very popular way to predict recessions in the US. So what is the inverted yield curve? Pretty much what an inverted yield curve is it's when the yield of a short-term bond is higher than a long-term bond. So that might sound very, very complicated, but pretty much what it is in the US, you can loan money to the government and then they will pay you for giving them money over time. So for example, if I loaned the government money for 1 month, then if I did that every single month for a year, then I would make 2.45%. Now, the interesting thing about this is whenever the yield curve inverts, that means that you can make more money loaning the government money short term than you can long term. So pretty much you can lock your money in for a shorter amount of time, and you will be making more money than if you locked it in for a longer amount of time. So obviously that is completely messed up because there is always more risk in investing your money long term, especially with the government, because you never know what's going to happen over that long period of time. So basically when this has happened, it has indicated that people are less confident in the long term. People are not so sure what's going to happen over the next few months, or they want to be safer on the long term. And that means that the short term is high risk, as people might think there is a recession coming up or something that could shake up the market. So that is why it has indeed predicted all 7 of the last recessions perfectly. Almost every single time the yield curve has been inverted, a recession has followed, and I will show that in this video. However, there are some key points I wanted to talk about, but first I just wanted to show you how the market normally reacts to the inverted yield curve. So if we look here on the past recessions in the economy, specifically the one in 2000, you can see here, I did plot where it first inverts and then where it eventually crashes. So for this initial recession in the economy, you can see that we did invert right here in March of 2000, which means that the yields for the short term was a higher return than the long term. So that's when it initially happened. And then we saw the maximum difference in yield. So meaning there was a 0.5% difference from the short-term yields and the long-term yields. So that was the largest difference in yields during this year. And then we did see in August, we saw that identify perfectly almost the top of the economy. And then after that, we did see the recession ending all the way in 2002. And then you can see here at the bottom where the recession did bottom, we did have a yield of 2.5%, meaning that long term you would have made 2.5% more than if you had invested your money short term, which is back to how it should be. And so then once again in this next recession, we can see something very similar. However, we can see that it is a little bit less accurate. It ended up happening a little bit earlier before the recession occurred. However, it still did predict the recession in the economy. So we can see the yield curve first inverts right here in 2005, and we saw the max inversion at 0.48% in November of 2006. But interestingly enough, unlike the last recession, it did not immediately crash. It took some time. It still went up. And then we actually had a positive yield curve at the top before the recession occurred. And then at the bottom, we did see once again the yield curve recovers at 2.14%. So I just thought that was interesting, as you always want to see how the market has reacted in the past to the yield curve in order to identify how the market might react in the future to the yield curve doing something similar. And obviously, we did just see the first inversion of the yield curve last month in March. So that can be, once again, a leading indicator for when the market might turn into a recession. So it is quite interesting that it did predict this recession perfectly. However, you can see that it wasn't too perfect on the last recession we saw in the economy. So obviously there are a lot of questions on how accurate it can be in the current economy. And one thing is for sure, that during the last recession, we did see gold was an extreme safe haven for the market. Everyone was putting their money in gold because there was inflation on normal currencies and also a lot of uncertainty within the economy. So people wanted to keep their money safe, and they ended up putting it in gold. So as you can see here, on the recession in 2007 and 2008, gold went up 58% during the last recession, which is during this period right here. So you might be wondering if gold can increase in value during these recessions as a safe haven, somewhere where people can put their money. Can Bitcoin be this gold replacement or storage of wealth that people can use during a recession? And obviously, we have not seen, sadly, a recession when Bitcoin has been traded, as Bitcoin was created after the previous recession. However, we did see this one move in the S&P 500, or the stock market, where we did see a 11.59 decrease in the stock market very, very fast, where some people thought another recession would start. And so an interesting thing about this is that during this move downwards, or small recession as you might call it, although it really only lasted a couple of days, but during this time, Bitcoin had a very, very positive move. So something that is very, very interesting is that before this crash in the stock market happened during last December, Bitcoin was in its huge bear market. We were seeing new lows every single day. People were asking how low it was going to go. And then all of a sudden, this recession in the stock market, this 11% downwards move over a couple of days, might have saved Bitcoin entirely and have created the bottom, as we see here. Right as this recession happened in the stock market, right as this downwards move happened, we saw Bitcoin go up 30% within the same period that the stock market was crashing extremely fast. So what does that tell us? That tells us that the stock market may have created the bottom on Bitcoin, and it also shows that Bitcoin may reflect the stock market, may be a store of value whenever the recession eventually comes by. So this is extremely interesting, as it's the only evidence that we have of this. However, obviously, if a recession were to happen over the next year because of this inverted yield curve, then I would hope that Bitcoin would react almost the exact same and maybe see a much larger move upwards, similar to gold of 58% during a recession, or maybe something even larger as Bitcoin is lower volume. But anyways, this is very exciting news for Bitcoin. And although some people might be bummed out that a recession might be coming, or scared because of the inverted yield curve, I think Bitcoin at this current level is very, very interesting to trade. And especially if we see a recession, I would almost put my money that Bitcoin would definitely go up during a recession because of its use as a store of value. So let me know what you guys think. Is Bitcoin really the digital gold? Has this proved that Bitcoin will go up during a recession? Do you think this inverted yield curve means a recession is coming? Let me know what you guys think in the comment section down below. And make sure you guys subscribe if you like this content. Anyways, guys, thank you guys so much for watching this video, and see you guys in the next one.